to another Daily Market Report brought to you by Mike Bjork. Today happens to be Wednesday, Hump Day, and it's August 12th. And we do got a couple items here on the economic calendar, which are important data here. These are inflation data, and they are the CPI, or Consumer Price Index, for the month of July. So back in June, we had a 0.6% increase, and then the month forecast for July was 0.3%. However, it exceeded that at 0.6%. So the year-over-year increase jumped from 0.6 to 1% on this one. Now, when you strip out food and energy, we get what they call the core CPI. This is important primarily because those are two variables that we cannot control, and this is really what the Fed will look at in terms of when they're looking at inflation data. So in June, we had a 0.2% increase. Forecast is calling for that same type of increase at 0.2. However, it like its counterpart, jumped up 0.6%. And its year-over-year jumped from 1.2% to 1.6%. Now, the Fed wants to keep has a target rate of 2%, but last week they did kind of mention that they are willing to go above that to try to get the economy jump started in there, which could lead to obviously higher rates on there. So again, this is something that we are looking at and keeping an eye on. But the Fed also looks at the PCE. The PCE, or Personal Consumption Expenditure, is the Fed's favorite gauge. But the CPI is also an important inflation data that we look at as well. So let's jump over and take a look at the headline news. Stocks are up this morning. It's basically not a lot of data out there. The CPI was still decent. It was even though it's a little high on the inflationary side, but we're just getting back. It looks like things are kind of revving up a little bit. But the COVID-19 market sentiment is improving a bit. You know, they kind of felt good about vaccines hopefully coming out, especially with Russia coming out saying that they are going to be first to market with the vaccines. We also had numbers seem to be kind of decreasing here in the U.S., which is obviously a good sign. They're trying to get, and then on top of that, we are seeing some economic trends that are showing some improvement there. So right now, they're feeling pretty good about where things are going right now, and as a result, the stock market is in a positive manner. So let's go ahead and take a look, see how this is. Take a look in the bond market and what mortgage rates are doing today. As you can see, we had a pretty big drop off. We actually were approaching the 25-day moving average. So it was about we ended up closing down 34 basis points and ended up having a reprice for the worse. Yesterday morning, we were down about 17, and it pretty much doubled that. So we had another price change for the worse. So this morning, we did drop below the 25-day moving average. As you can see, we were even much further down. About when I came earlier, it was about 9 basis points. Now we're down to about 3 basis points from where we left off for the day. So let's go ahead and take a look at what yields are doing. Yields are adding a lot of pressure here. As you can see, we jumped through a lot of different ceilings here and upwards, all the way up to like the 200-day moving average here. This is, I believe, the 200-day moving average. And right now we're up to about 0.6648. So in other words, just almost a 0.67 here. Now we do have some more room to grow. We can even go up to this level here. But again, these are some levels we're looking at. The reason being the yields are going up, of course, market sentiment, stock market is doing pretty well. But also this week we're seeing a lot more investors didn't really like the amount of volume or supply that's out there in terms of the auctions that they're going to have. We have a couple auctions going on this week, and there seems to be more supply than demand, which is driving yields higher as a result of that. And of course, talk about the possible inflation concerns that when the Fed said that they are maybe willing to go above that 2% target rate, which kind of started in last week, comments about that. So as a result, rates are a little bit worse today, even though we're down only about 3 basis points, but we were down even further than, of course, yesterday's sentiment. So a lot of lenders will price in a little bit worse pricing today to kind of cover themselves so they're not losing money as a result of that. All right, so that's pretty much the result of the day. Stay tuned if you want to get more. If you want to get some mortgage information, I'll leave you a link on my on a website. You can get more mortgage information. And I am a loan officer, so if you guys are looking to refinance or buy, we're here to help you guys out. So stay tuned, and I'll leave you a link you can take a look at as to how to get more information. Take care. Have a great day.